Good afternoon, Knuckles. How we doing? Sorry for being away for a little bit. I've been handling a lot of things outside of YouTube and the market as of recent. A lot of good things, a lot of great improvements coming. I just got a new GPU so I can actually do more with the stream and with my own setup and a slew of other additions. So my apologies for that. We do have a lot of interesting developments going on as far as my little journey with trying to break down whatever algorithms control the stocks that we look at every single day. The same one that makes all the stocks look the same. I digress, though. This is mainly going to be about some of the discoveries that I've come across and how I've been implementing them via code, and also just a little update on some real frustrating shit from earlier. So to start off, I wanted to go in on YOLOs today. I wanted to buy some calls that expired tomorrow that were slightly out of the money on my boy Jimbo, and I got over by my broker. The deposit did not hit today, despite it being a wire transfer, so that sucked a lot of dick because I would have made at least 5 figures had I been able to get in. So I was tweeting all day as I was working through the thoughts and the approach to this. So this was all the way from market open. We had this huge recovery, and along the way, I jumped into some YOLOs. Right here, I made a couple grand. It was great, solid, happy with it. But then I realized I think there's a lot more to this on the table, and I was looking at some of the indicators that I've created, which I will get to here in a bit, and I realized that there was definitely something brewing across the entire market. There was basically this inverse rug pull, all of this shorting approach by market participants, retail and institutions at the same time, going into puts and just selling stock shorts, etc., etc. Basically, those who can actually control the charts gave a little rug pull on the shorts, on the bears. So I could kind of see this fermenting and developing, and I realized that there might be a lot of upward pressure that's trying to be released on GameStop and AMC. So I had pulled out of those calls around 10:30, 10:45, and then I realized what I think is on the table. So I made a deposit, and it just didn't fucking hit. So I got to narrate what my P&L could have been, and wasn't able to actually have it happen. It was a real fucking travesty, because that sucked a lot of dick. So I closed out here at 10:30, and this is where the mania and the frustration and the agony of looking at a chart going up begins. I could see the ascending wedge forming. I could see that we had some major crossovers happening on the charts, and before I knew it, this thing was going up from a low of like $98 all the way up to 127, I think, is where we topped out at today. So had I been able to get in on this, I would have made a fair fucking penny. Anywho, my complaining, bitching, and groaning aside, let's dive into this. So we've kind of had a lot of turbulence. I mean, that's pretty straightforward. That's without question, and everybody knows that. Let's pull up Ortex real quick. So GameStop sitting at 20.5% short interest, cost to borrow relatively flat. AMC sitting at 21% short interest, cost to borrow also flat. Both of these are still at 100% utilization. A little note on that. Because the market has been going down, not only are you going to see shorts exiting their positions because that's how they take profit, they go and buy back, but also any of these custodial agents, aka pension funds, mutual funds, etc., those who are actually loaning these shares out are going to want these shares back because of the demand that's going on with people wanting to short. The securities lending market flourishes in conditions like this, but that comes with more reactivity going on with those participating in it, meaning that anyone who is holding a massive loan for any duration of time is going to be forced out of it in a very natural way because of the fact that there are more people trying to do the same thing. So those custodial agents will hike up their interest rates, full pun intended. JPal, please stop printing money. But they'll hike up the borrow fee, and you'll also see supply and demand take on its own effect within the securities lending market, which means that less supply, more demand. So they got to keep that spinning, and you're going to see some movement. That's just how it goes. And so with that, you have a concept that I'm sure has been written down and expounded upon somewhere in a fucking econ book or a finance book. But my intuitive approach to this concept is, or what I intuitively form it as, is short interest is kind of the engine to sector rotations, or rather it's the oil to the engine of the market. So the way that money moves around throughout markets is entirely dependent on what's going on with liquidity. And liquidity is a very broad term. Not many people ever give it an explicit meaning. It's very ambiguous. But what I mean by liquidity is you have some capital, some form of money that you're looking to gain a return on. And the vessels at which you use to get that return is your platform for liquidity. And the liquidity itself is not only how much money do you have, but how easy is it to move around? How frictionless is it to jump in and out of positions? So normally you'll see a bunch of this residual activity take place in a particular sector. So if tech is booming, you're going to see a lot of money move to that, and it's going to have this inertia effect where it's going to try to stay there for as long as it can. And you're going to see bears and bulls going back and forth with each other. And that's their battleground. That sector is their battleground. Eventually, you'll rotate, though, into something else, whether it's tech just getting rug pulled or tech booms too high and most of the bulls have pulled their money out and they're ready to move on to something else. It's pretty much like a forest fire in markets. You have the forest fire. It sucks. It's dreary. Everything's dead. But that means that a new piece of life and forest can become anew and whatever the fuck you want to come up with. So you'll have short interest rotate out of that because there's less volatility, there's less activity, there's not much yield to something that is inactive relative to what it used to be in terms of activity. So that is what cascades the platform for a sector rotation. And I think we're seeing this concept not only in these individually labeled sectors like tech and growth and value and blah, blah, blah. I think it's also happening, I don't even think, I know. It's happening between these differently flavored market cap companies. You know, blue chips are your typically your largest market cap companies. And that's where most of the market's liquidity has been focused into. And for good reason. We've had pretty much this decadent, insatiable amount of money printing for the past, well, really 3 decades. But as of recent, it's gone really fucking haywire. And with that typically yields a lot of security to the equities market because that means that bonds are undervalued. And if bonds are undervalued, then you're going to go and take that opportunity up elsewhere in something that does have opportunity and value, which is equity. So I think that we're starting to see that rotation gain more and more momentum. We've been talking about it for a little bit now, but I believe that this rotation that I'm speaking of from large cap to mid and small cap companies is about to be right around the corner. It's been happening slowly for a while, and you won't notice it like that. But one day you will. It will be like this, a lot of money just pouring into different companies that aren't Nvidia and Apple and Amazon. And that is the result, that recognition of it is the result of this very slow dripping of liquidity going into this new type of sector. I think that's what we're seeing. So with all that being said, short interest will naturally go up or down, actually rather technically. And the cost to borrow will go up, which will cause what I just mentioned. So let's go ahead and talk about this shit real quick.